Hey everybody, welcome to a little video here. So I wanted to talk about Goldman Sachs today. Let's take a look at markets first. But first of all, I am Hans Albrecht, 15 years pro market maker, and then another decade after that running a whole bunch of cover call, income type funds, downside black swan protect funds, whole bunch of stuff, offense, defense, all kinds of fun things over the past 3 decades. So welcome to what we're doing. Of course, as always, it is for entertainment purposes only. If you're okay with that, let's keep going. If not, we'll hopefully see you in another video. It's your trade, your responsibility. Let's take a look at the market today. So we had the SPY basically up just a little bit. It's exactly as I've been sort of saying to members, I've been saying, listen, this is going to be a false start both ways kind of market, right? We're going to have false rallies. We're going to have false sell-offs. I think as long as we can stay above this 9 EMA on the SPY as well as the Qs, I think we're going to be okay, right? So we can see the Qs here are basically kind of doing an under the high wire act here. They're trying to get above this line here, which goes way back to early September. We broke down through there, of course, during the recent high beta sell-off. And then we've basically been climbing this wall of worry. What a wonderful expression that is, just climbing, 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 climbing. A couple of little red candle days, but we basically almost hit this 9 EMA again. So we're sort of in this land, this no man's land. Back here, I said this could be an area where we start to get option pricing really, really compressed, right? You're going into the holidays. You have this flush that happened, which I put out a video on that. If you guys haven't seen it, I said, listen, this was the signal for me that the all clear might be there, right? That they're starting to crush that option volatility. They're starting to crush longer term options. And of course, the short term ones, which you would expect going into the holidays without, in the absence of something crazy happening. That usually is what happens because no one wants to hold this stuff going into a few weeks of, probably quite quiet markets, could be very illiquid, right? And so that's what kind of adds to this sort of false start, false sell-off kind of market, which is you feel like, oh, something's about to go, and then it just completely fails because there's no sort of conviction there. There's no liquidity. Nobody's around. So we could see that happen, especially after FOMC. Of course, FOMC is a big question there. What we are seeing is a continuation of something that I've been sort of talking about for a little while, which is, and we certainly had a pause there, but we had this broadening sell-off, and then we're broadening again. So the thing is, we're not really seeing a massive move out of technology, but it is definitely spreading into other areas. Is it warranted? Absolutely. We're starting to see those profit margins move into kind of the middle part of the market, and that's going to start feeding down into the smaller caps. Even though 40% of the small caps do not make money, this is not all great stocks. Look at what the IWM, which is the Russell 2000, just doing really, really, really nicely. Tesla coming back here. This is the kind of stock that I think has a little bit of trouble just for the moment because it's high valuation, high multiple, and I think the market has less tolerance for that right now, right? It tends to be focusing more on the Goldman Sachs's and some of the stronger plays, unless it's a very, very strong higher beta play, which I think Tesla has very much the potential to be, and I think it's going to have its day. I do really believe this thing goes past 500. For now, it's just going to have this. You can see it just can't get out of this sort of longer term consolidation. One area, and Micron, we've seen semiconductors do well in general, even without NVIDIA, and Micron has battled all the way back. What a beautiful gift this was around 200. I loaded up big time down here, and then here we are all the way back to the all-time highs. This could actually has the potential to be a new closing all-time high into what is really a shortage of DRAM and incredible pricing power that these companies have. Some of the ones that I thought might get going, Amazon is just, it always breaks your heart, this thing. It got going, fantastic numbers. It is the sort of highway, the everyman sort of cloud highway for what is happening in the world, but it just isn't, it's not happening yet, but it's a good valuation. So I'm not at all worried about that situation. And then of course there's Google, which I got out of, if you're in the community, I got out of basically on this high day here. I got out of some at 300 and then I scaled all the way up to 326 and now we're going sideways. Not that I don't like it. I think this is one of the very best stocks in the world and certainly the best AI stock in the world. So I am watching this one for an opportunity. I like to see that option pricing is getting really, really hammered here, right? So this is going to set us up. This is short term, so you'd expect that to happen into the holidays again, as I said earlier. But I think, as these sort of of longer term option prices come down, I think that's going to present a very interesting opportunity for us. Another one this is one of my very biggest holdings in here. We've got a very nice MTI green on here. Turbo Scanner's liking it. The Turbo Scanner Pro, which I'm going to show you in a moment. This is looking really, really good. I like to see stocks like this above the 9 EMA. Sure, they took a bit of a hit here. Beautiful gift as well, down around $100. And I think this is one that for me is one that I have in some accounts that I'm just going to keep there for years and years because I think they continue to grab market share. Some of the software names have come back a little bit. Look at CRM here. It looks like it wants to try to break out here. They are actually handling AI quite well. And Adobe, we've got numbers coming out tomorrow. What is that, before the open or after? It's usually after the market close. We're going to see what Adobe has to say. A little bit slightly different there, right? I think Adobe is a little bit more susceptible to the advances in AI, whereas CRM is a bit more, Salesforce is a bit more relationship based and very, very ingrained in companies. So difficult, it's pretty sticky, right? When you're a customer of CRM, you're pretty sticky, at least at this point. Snow just smashing my heart to pieces here, coming off down here. Interestingly, even up here, we had kind of a yellow on our scanner, and it wasn't really getting super excited. And now we kind of have this coming down. Members have been asking me, can I get in here? I said I wouldn't, and it keeps going. I think there's a good chance we could get down to 200, where it becomes a little bit interesting again. And then a few names in that crypto area that are just kind of very, very tenderly tiptoeing back up. Nobody believes it because they got so hammered. I mean, Circle got cut in half, and now it's kind of coming back. I think this is an interesting one. I did add a little bit of stock exposure. Lately, I've been adding stock exposure in a lot of ways because the options were so expensive. I said, listen, I think it's dangerous to get involved in some of these options because the option compression is going to be, the pricing compression is going to be pretty amazing over the next little while. And that really is what's happening. Now, the stock of the day, which is one of my favorites, one of my very biggest positions. I've made no secret of that it's been one of my biggest positions for probably the better part of 7-8 months now. And here we are breaking out again. What a beautiful, beautiful move. Let's take a look at what we have on our Turbo Trader scanner. Here we are. We've got very nice green MTI and overall sentiment on Goldman Sachs. We've got the broader market, SPY, QQQ, and IWM all lining up very nicely with all the metrics that go in there, the technicals, the volatility metrics, all like very, very probably about 20 different things that go into this stuff. Green this time, right? Remember we sort of had that NVIDIA rally and it was yellow. It didn't like something about that, the texture of that market, and it was right. And then we had that big high beta flush. So if we come down here, we can see our alpha momentum. We could see a lot of really starting to broaden out a little bit, but we can see, interestingly, we are getting still a lot of reds there, right? So that's basically saying, listen, be a little bit careful. It is not the time to YOLO some of these areas. There are some areas that have been okay. We can see healthcare kind of turning a little so-so. The gold tilt, a little so-so as well. So it's a little bit cautious. And certainly many of the squeeze ratios, the squeeze ratio that I look at for the crazy money, this is not really the kind of market where you really want to go for that Hail Mary. I don't think it's going to happen at this point. We'll have to see what happens after FOMC. But over here we can see a number of names that are lining up really nicely. Incomey, that's a right arrow income. That's actually quite positive versus a down or a left. Yellow. We've got some rights here. Of course, Alphabet still lining up quite nicely, even though we've had a little bit of a pullback. That is one stock to watch, absolutely. So if you wanted to line up a turbo there, you've got your strikes. You've got a net debit, net credit. Here's your net debit on the one that it's suggesting, and it goes through a lot of different avenues to come to the conclusion that this is your most favorable turbo, which is going to be that income plus upside sort of play in that Feb regular expiry. If you did want to go with something like a Lilly, which has pulled back nicely, we've got decent option pricing levels. So this is lining up for a little bit of an income play. And so this is the kind of thing that really gives you the ability to not have to do hours and hours of work. This is 3 decades of everything that's gone into my head and kept me out of trouble, and has created this incredible track record because I know when to not step in the piles of you know what, which is half the battle in this game. It really is. It absolutely is. In the income game, where you're really selling leverage, you're selling somebody else the ability to make multiples of their money, you need to be that much more careful. When you're creating a bond proxy, you can't create a bond proxy on something that's potentially at least is giving you signs that it is not healthy and not stable, right? That is what this game is all about. And make no mistake, you can have an 80% win rate and still not make money. So I know some of you have reached out to me. I've said that before, and you said, Hans, I know exactly what you're talking about. You're speaking directly to me. Of course I am. I've been doing this for decades. I ran $750 million in income funds, and I would battle management and say, no, I'm not doing this. I'm not doing this, because I knew what made sense. So we can see we've got some interesting ones in here. Definitely some healthcare on the docket. We've got some income turbos. I know there's a couple of energy names kind of almost on deck, like in baseball, just about ready to pop in here. But for now, it's going to be a lot of financials, healthcare, a bit of IT, communication services, which is Google, and that's it. So let's see how things kind of line up. Again, I'm not going to be doing anything too heroic this week, but I have been trimming a little bit of MU. I've been trimming just ever so slightly a little bit of Goldman Sachs. I've literally been buying this thing for the last 5 months, and along the way have sold extremely little. In fact, I bought a little bit more on the last pullback as we had this MTI indicator. My indicators were basically saying this is lining up for some further upside. And if we look at a little bit of history, we've got the MTI down here. You can see sort of keeping you out of trouble here, right? That's one of the nice things, is kind of tells you when to get out, when to hedge, when to say enough's enough, and then keeps you out of what is really kind of a bad picture, right? And again, that's part of being successful, is staying away from those temptations. What your neighbor's doing, what they're talking about on TV, forget about it. Don't worry about that stuff. This helps you really drown out the noise and keeps you focused on the things that are working. And you can see here, we start to get green. We have this wonderful, wonderful run, more of an incomey type market right in here, and then a cautious lookout kind of market. And then right here, which is interesting, it called the breakout. Well, it didn't call a breakout, but it started giving you the full green MTI, which is starting to be turbo, right? Play that upside, play for something a little bit more aggressive. And that even happened well before this breakout here. So I love that. When I see that, sometimes you get it after the breakout or right as it's breaking out, or even a little bit, a couple days later, and it's powerful all the same. But when I see this ahead of that, look, there's nothing really very big going on here. A couple of weird sort of wiki candles, nothing big happening, but suddenly it says this is shaping up to be something interesting. So this is and you get this indicator in the program as well. So you get these indicators, and you can use this for any stock you want. It doesn't even have to be in the scanner. You can have your list of all the stocks you want. It's free. You get a free TradingView account, and you get this indicator. We've got an ejector strategy for when things go wrong, a couple different ways, quant-based, options delta-based, but also an actual indicator that gets you out. So one of the nice things about that is one of the hardest things in trading is finding a good trade, of course, getting out of a trade, whether it's for a profit or for a loss. That's extremely important. So having an indicator like that's important. And then number 3 is keeping in those good trades, right? You want to stay in those good trades, because otherwise you're just kind of spinning your reels, right? You sort of make, you lose, you make, you lose, you make, you lose, and then one gets away from you, and now you're down money, and you're like, well, I've had students come to me and say, I've spun my wheels for 2 years, or I'm down money after a whole year of trading, and I was up a whole bunch. That's the problem, right? So if that sounds familiar to you, the proper tool is going to help keep you focused, keep you on those guardrails with rules that really keep you in the game, because you can do this for excitement. I go to Vegas for that, or you can do this to make money. And I prefer the latter. So here we are, Goldman. I'm going to let it go. I sold just a tiny little bit today, just to say that, okay, I sold it. I got the high, the all-time high, but I'm going to let a lot of this run. My personal target is $1,000 on this thing, not financial advice. $1,000 on this thing. They're doing all the right things. The IPOs, the deals, one of the biggest years ever. I said that earlier in the year. I said this is going to be a massive deal year, IPO year, deal year. They are absolutely the forefront of being able to take advantage of AI efficiencies, productivity, right? What's the low hanging fruit? It's not building factories with AI. It is the finance, the pushing paper across the desk kind of business where it's all digital and ones and zeros and things like that. That is where the smartest guys in the room are going to figure things out. And the Goldmans are going to figure it out, right? And I want to stay. I like banks, but for the moment, I want to kind of stay away from a little bit of the personal loan side of things. Maybe commercial real estate, not too big on that area. I think those are areas that come under pressure at some point. So I want to be in the areas where these guys make tons of money, like at JPM. They make so much money trading. I'm from the trading world, and I can appreciate volatility and how it turns into profits. And that's what these guys do really, really, really well. And they're saving money. Remember when I mentioned 8 months ago, I said Goldman Sachs, they can do an IPO for about 95% less work than they used to and a lot less cost. So think about how that's going to play into their bottom lines, into their profit margins. That is what we have to look forward to next year. So I'm excited about the broader market. I'm excited about a few stocks like these, and I've got a whole bunch more. Right now, we've got a few positions on in Turbo Trader Pro. And when you join, you get weekly calls. We go over it. You get to learn to earn with me. We manage together. We experience together. We take the journey together. And that's what makes this completely different from all the junk that's out there. So I hope you'll check it out. The price is going to be tripling over the next couple of weeks. I hate to say it, but I've just got, I can only handle so many people in this program. And you know what? This took a heck of a lot of work and money to get this thing going. So let's do this, and let's look forward to 2026. And all the best to everybody. All the best in your trading, your investing, and your health, and to your family and friends. Enjoy, and we'll see you in the next video.